Hi guys, this is a new video on uh, my ZENTEC trade, which has delivered outstanding return. Like it has moved really well, and I bought it on. You can see this. I bought it on 15 Feb. At this is how it was at around 215, and today the stock is. This is how the This is how the stock is today. It is at 272, and I'm holding almost every position I'm in the entire position that I bought here. Why am I holding it? Why did I not really book it early? So let's discuss the entry. And if you have been regularly watching and following the trades videos, the entry is nothing great. I mean, nothing different. This stock was discussed in one of the watch list videos where I showed that this stock had been showing relative strength. Like this is the layout which I had discussed once or in one of the videos. So ZENTEC, clearly you can see when I bought ZENTEC on this day. Let me change the chart. So when I bought ZENTEC, you can see before this is the day I bought 15 Feb. Yeah. So on this day, it was really before like buying this, I showed that ZENTEC is showing was showing relative strength. The entire index was down, making lower lows. The 20 DMA was in a downward trend, and here the stock was in an upward trend, and the volumes had also picked up. So clearly, it was it was no brainer that there was a strong outperformance from the stock. So that was the reason of selecting in my watch list, and I'd explained it also. Then when I bought it, when I made that video of relative strength, and when we discussed Zentech, and I said one thing that this is a very interesting stock because this is a little different from the others for two reasons. One, um, it belonged to a strong like aero all these defensive aerospace stocks, and these stocks were outperforming the market. So basically it belonged to a very strong group. The bigger reason than the strong group was this stock in particular had moved from 80 to 200 almost 3x in just few days, not even a month. It was, I think, just 10-15 trading sessions, and it went 3x. So it tells you the nature of the stock, that when it moves really, really fast. Since then, it had been consolidating. So when I bought it here, and on the same day itself, when I got a move like that, plus we were already towards the lower end of the market breadth, and we know that if we are already at near the lower end of the market breadth, if let's assume let's assume that if market takes a u-turn and starts going up, the upside is very, very good. So if you combine all the three factors, of course I could have gone wrong, and then I would have just maybe like if at 234, if I decide to ride it and it does not go up and it hits my stop tomorrow, that's perfectly all right, because I'm accepting that and I'm okay with it. But if I have caught Zentech uh, at a price, and then the same day itself I have a good move, then the market breadth is also already at a lower end, and if it market also turns around, then the upside the market push will help it. Plus, the nature of the stock is really really strong, like fast. So I decided to risk my open gains again. This is a game of taking risk. I could have gone wrong, but this was my mindset why I decided not to really come out of this trade early, because this this stock moves really fast. It went up 3x in just few days. I'm not saying it will go a 3x again, but uh, it can really move fast. So that was my reason of. So first of all, I bought it when I got a strong start, and I bought around 215. You can see there were three tight. there was a there were two inside days, and it's a very very tight in the morning. It gave a strong start. So again, if you've been watching the videos regularly, there was nothing different. The entry was very very typical. So I bought it at 215, and and well, after I bought it 215, the day one closed really strong. You can see the increase in volume. The average volume is much lower, and the on day one the volumes was 6 million. Now, if you get a volume like 6 million, it's not your buying or my buying. It's a not some small buying. It's an institutional buying, and the closing was almost near the day high. So the bulls were so strong that they managed to close the stock near day high. Now see everything. Now try remember everything that this stock is a beast. The market is already towards the fag end of the market breadth. If assuming if market takes a U-turn, that will push this stock higher. This stock belongs to a strong group already, so why not take that risk? So I decided to risk it, and I just left it for a day or two to see if the trade really works or not. Then the next day, nothing really happened, and then on day three, it made a new high, but did not really could not really stay, and closed little higher from day one. So again, on this day, if you're micromanaging your trade, some would really chicken out and then sell because you're micromanaging. But again, if you only watch towards the closing, all your strong positions, then you can really so towards the end, I saw that the position is still yes, it did not stay um like it made a new high but could not really stay, but it is not closing somewhere in the middle. It's still higher than the day one, and it's not the rejection is not on a very very high volume. It's still higher but not as high as this one. So I again, like I said, I the overall picture was in favor of Zentec, so I wanted to again risk it. And at this point I was not really in a hurry to close the trade. And then the next day itself, whatever the sellers were present, they were just completely hammered, and bulls were again, they managed to close the stock right at the highest point of the day, much better than day one also. So I was back, the Zentec was back in the game. So again, nothing booked here, and not in a hurry to close the trade also. Then the next day, I had a very, very small doji kind of a day on a higher volume. Now, if you see the angle, um, it's right 90 degrees. And overall, again, I still feel that the position is the stock can do really well, but because we've been swing trading and we know 3 to 5 days is the move and the angle is also stretched. I know that this will first take a pullback, and then I don't know how bad the pullback would be, a very normal one or very wild one. If it is a wild one, it can really stop you out and then go up again. But then these are the risks that you take. So I decided to just close half. And but when I decided to close half, so I closed half. I closed half on 21st Feb at 258, right at the morning bell, because there was a gap up opening and it was already stretched a day before. So when it opened right at the morning bell with the gap up, I just closed 50% position. But when I closed it, I closed it with the mindset that I'm going to buy it back after some, let's say, 10-15% correction. If it drops 10-15%, I'm not going to really uh, get into too much of where is the tight area and all that. I will probably use the reversal technique, which we use when we get 4-5 down bars in a row and then we enter. So I thought if it falls back 10-15%, I'm going to go smaller frame. And if I see a reversal setup, then I will buy it back with my original stop and not really worry about it. I would just consider that whatever the profit I booked, I sold at 258. And if I, let's say, get it at 240, so that 18 point would reduce my original cost. So I will consider that my new buying price is much lower than 215, and I just stayed in the trade. So, and this is exactly what happened. The next day, the stock came down, but nothing really a big drop. So I was not really in a hurry to enter again because this stock moves fast. These are wild moves, so it gives wild moves. So it can also give a wild, equally wild move when it comes down. So the next day, this is how on 22nd Feb, uh, the ZENTEC did, and I added on 24th Feb. So on this day now, you can see already there are two big down days. If you're an experienced reversal player, you can now imagine how the smaller frame would look like. On a smaller frame, there is a good possibility that you have many down bars in a row. So you need to be ready if there is a reversal trade there. So on 24th Feb, which is just the next day of this is 23rd. On 24th is when I added, and let me show you what I saw. So this is how 23rd closing is. Now you would some would wonder why did I not add here? This is also many down bars in a row. But like I said, it is just on a daily chart. You can go and see that this is just a 6% fall, and I was not in a hurry to add at just a 7% drop because Zentech moves wild. So I wanted some 10-15% correction at least, and then probably see a reversal trade. So on 23rd Feb, this is how the stock closed. This is the closing of 23rd Feb. The next morning, it gapped up, did not stay. There's no reversal trade. And then you can see that this is the lowest point of the uh, previous day. And it undercut that low. But right after that undercutting that low, it did not really go down for next 30 minutes. And then there was a good move. And now go back to my all my reversal tips that I've given you. When you get a reversal, and if there is a speed in that reversal, there is a good move, good reaction from that reversal. Those are the reversals that I like. If you buy a reversal but the stock is taking too long to reverse, mostly those reversals don't work. I gave you that tip on the bank nifty trade that I caught where I got 800 point move, and one of the members also used the same trick to and I think she also got 500 point move something somewhere. So using that same logic, I noticed that now Zentech is refusing to go down and instead has given a good reaction. So now the tip here is that if you're not watching it on, obviously if you're not on the screen, use alerts to at important levels to see to get notified that this is how the stock is doing. So now this is how it reacted from there, and this is where I added at 237 on 24th Feb. And when I added at 237, I placed a stop just below this this lowest point, because if this gets triggered, then all my assumption that there is speed and now the stock is refusing to go down, if it this level gets triggered, that whole assumption is absolutely wrong. It goes wrong. So I will, this is the my stop point where I would be wrong. So I added back the sold quantity, and this was my stop. And fortunately, it just, because it is a very very strong stock, it came back the same day itself. By towards the closing, it made a new high, and you can see it 272 now. Since then, the stock is right there. I have not booked anything. In fact, I just uh, reduced my cost with some quantity by catching this move, this drop. And now the stock is there. What is my stop? How am I going to trail it? Because I have a great cushion, and I have huge. Uh, I feel that it can do really well. Again, I can go wrong, and which is why I'm risking my gains. So if you know that I've already explained in some of the trades, when I have great cushion, I'm going to manage it with the rising 20 moving average. Again, not a just a touch and go. It has to close convincingly below this moving average line, 20 moving average line. And if it does, then I'll close it. And my safety stop, that emergency stop, is going to be somewhere around 225, 226. And till then, I'm going to, if it keeps giving me in additional buy areas, I will add more to it. I don't want to really close it because this trade has given me a good cushion. I can go wrong, but if I am right, and if it repeats this, even if like by half of what it had done here, I'll make really good money. So I'm not going, I want to, instead of, this is the edge that I talked about. People are, where people think of exiting it, I want to add it more of it. Instead of exiting, I'm looking ways to add more to it. I can go wrong again, but this is the risk I want to take. And let's see how it ends up. And I'll keep you posted. So if you have any questions about this trade or anything else, please use the club channel and let me know.